Hello everyone and welcome to Elliott Wave Cafe. I'm going to start today a new series called Coffee and Stocks, and I want to see what kind of response I get from the audience. If we're going to get any traction, we're going to continue going with it. But I wanted to pick some stocks here, maybe every week, maybe a couple of times a week, depending on, how much interest there is out there about this, and we'll try to take a look at what's good out there and start to present some of the counts that I think make sense and hopefully give you some good information. Again, I wanted to start by saying this is not financial advice. This is the way I look at the markets. This has got educational purposes, so you have to do your own research, especially when it comes to stocks. You got to make sure that you find as much as possible. So I'm presenting you here with Elliott Wave counts, and I'm just trying to educate in this matter. So with that being started, let's begin. You can find me here on Telegram at Elliott Wave Cafe. There's a couple of open chats in there and open forums, and then there's also a premium room, and then you can find me on Twitter at Elliott Cafe. So with this out of the way, let's just kind of get started. On today's episode, I wanted to take a look at IBM, and this is something that I've been talking to the members in our room here for the past couple of months, but more recently here, I purchased this, and it's I think it's got very good opportunity. It's a good opportunity, and it's got a good Elliott Wave setup as well overall. So what you're looking in here, you're looking at IBM, right? We're looking at International Business Machines, and this is a stock going back almost since the 60s. So you're talking 50 years, if not more, of data that I have into this chart. Now, I haven't put a longer term count on this. I'm not interested in doing that at the moment. I don't think it really matters. I mean, clearly, the prices have moved from from the lower left of the chart here, to the upper right, and it's clearly a trending market. It's been having its bumps along the way, but what draws my attention, it's obviously a period of huge consolidation here since 2010, 2012, when IBM has basically done nothing. And I think we're coming, towards the end of this structure. And this is kind of what's got my attention. And I think in terms of, Elliott Wave count, this is something that presents a good opportunity. Now, you can also see that in relationships to the S&P 500, it's been a very big outperformer. It really hasn't done anything, like I said, for the past, maybe even 10 years. So it's been trending downwards in terms of relative strength compared with the overall market. So going from that kind of larger time frame, let's going back for the past 20 years, 19 years here since about 2002, and you can see that the stock has been trending. It's been going here from 40 all the way up here to about 140, and then since then we've done nothing. We've just literally been very outperforming a lot, and then also just kind of moving sideways. And I think there is something to be said about this. I think this is building a very big base, and this stock is kind of getting ready to break to new all-time highs and start to trend upwards a little bit. It's got very good dividend in here. You can see it's up here to about almost 5% yield, and it's got a very large market cap. So it's not one of those things that is going to move that easily, but I think once it gets going, it's going to be very hard to stop. And yeah, I mean, if you want to stop the video and try to count the sequences here, I think it's a good exercise, and just kind of see what type of a corrective pattern we have back in there. And I've actually, going back to my Motivate software in here, it's a little bit easier to see. I don't have as much data as I have into the stock charts, but just kind of going back from 2000, you can kind of see the corrective pattern in here. It's nicely contained between parallel lines, and I think, again, if you stop the video and try to count the sequence from these highs all the way to these lows, I'm really curious to see what you're going to come up with and how you can count this decline, right? So you can stop the video right here and then come back and take a look at my count. All right, well, I'm back, and here is what I think is going on here. And you can see up here, this is a 1 week chart, and this is my setup. I think the decline here happened nicely and impulsive here in this wave A, from those almost $200 highs, and we've come in a nice impulsive decline. And I think even without looking at the moment at what's inside this leg, I think this is nice, clean, and impulsive. You've gotten a pretty decent pullback in here. I think this is a B wave that kind of splits this whole decline in two. So you have a wave A, you have a wave B up in here, and then you come down here in wave C. You can see in terms of equality between the waves, we had 100% here at about 98.84. We dropped below that a little bit. I think we even went below 90, right, in this big flush back in March of 2020 at the beginning of the pandemic. And since then, we've recovered nicely. And this is 100% equality between wave A and wave C decline in here. So it's almost the textbook decline. The shape of the decline, it's very, very similar, right? The angle of the descent, it's very nice. So, for me, this is almost like a textbook Elliott Wave structure that tells me you've got a very nice zigzag happening in here. So jumping from this 1 week to, it's another 1 week chart, but in this one I actually have all the subdivisions, and I look at it as having a wave 1 decline of those highs, a very nice pullback in a second wave here for the 618, and then you've got a big gap here, right? You have this acceleration gap to the downside, which is characteristic of a third wave. You have a nice 5-wave decline inside this third into a 1, 2, big drop in 3, 4, and 5. And here you complete this third. You pull back in fourth. You kind of get back to about a 50%, and then you pull back here in this fifth wave. It's a longer fifth compared with this wave 1, but it's at actually 161.8 multiple versus wave 1. It's also at about 100% equality with distance travel between wave 1 and wave 3 in this wave 5. So all of these are hitting very nice, fib projections, fib multiples in here, and I have very nice equality and just a nice overall structure. Now you might argue with the fact that I'm getting a little bit of a sign in here that says that wave 4 got into the territory of the wave 1, right? And for me, this is a little bit of a problem. But I'm just going to have to say this, guys. I think what happened here is the stock pulled up, it tried to close the gap, and it didn't even get all the way up there. So I have to go with the fact that this is a fourth wave. Even if we're, the rules get broken in here and you get into the territory of the wave 1, I think this is the correct way to count the decline. All right, so I don't see any other solid way. I've tried to look at it as a leading diagonal, maybe a flat in a wave 2. If you want to do that, that's fine. So that's an A, that's an A, B, and an up in C, and then you start the decline, and then you're not actually getting into that wave 1 setup. So that's more of a personal choice. Overall, if you step back from this, pure Elliott Wave counting rabbit hole, you can see that the decline is clean. It's in 5 waves, creates a wave A. Then you pull back up here in this wave B at about $182, and then you decline back into this super nice expanding leading diagonal. So again, this is more of a learning feature as well in here. If you want to see how an ending expanding diagonal looks like, this is what it is. You have basically a wave 1, you have a wave 2 in here. So these are all 3-wave patterns in here. You have a nice ABC. You got a pullback in here, another ABC down. So you have a 1, you have a 2, you have a 3, you have a 4, and then you have sharp down. Somewhere in the middle here, you have that wave B. You drop down in C, and this completes the decline. So this is an expanding ending diagonal in this wave C. Since then, you can see up here, you have the decline here, in this third wave, it's 161.8. The pullback here into the 786. So very nice, 1, 2, down into this 1618. You pull back here again into the 786, similar with this one, and then you pull, and then you drop down again, and then you have a 5 versus 3 equality. You have C versus weight, that larger zigzag. So everything kind of looks almost picture perfect. Now, the advance from here, it's kind of choppy, and you're trying to get an advance off the lows. Possible wave 1, wave 2. You're doing another 1 and another 2, but this is a very big stock with a big, huge market cap, and it's going to take a while until this thing gets moving. But I think it's just in the initial phases of this happening. And what's going on in here, we're trying to break above this, and we're trying to attack the top of this trend line, and then we're trying to get towards 182. So this is my first target, as I'm already long into this thing. And then my next target here is 215. but I think it's got potential to go over the next 5 to maybe even 10 years, to get a much larger multiple of this, let's say, $100 stock. It could become maybe a $500, maybe a $700 stock over the next 10 to even 15 years. So pay attention to this. These are the type of setups that I look for that are nice and interesting, and I think they can provide you with good opportunities going forward. Again, do not expect this to happen overnight. This is more of an investment. Again, not financial advice, but just kind of showing you what I see onto the charts and in terms of the Elliott Wave structure. The other thing I wanted to point to is the fact that we have broken, obviously above this massive sideways consolidation where you have a big cluster into these moving averages where all the 20, the 50, and the 200-day, they're all on top of each other. You're kind of starting to trap upwards. This 20-day moving average points up, and shortly the 50-day should follow in here as we're getting out of this kind of sideways consolidation. Right, so this is what I'm looking for. I think it's exciting, and I think that it's something that's going to provide good rewards going forward. Also, kind of going back in here in terms of the relative performance to the S&P 500, you can see that we're starting to coil up. We've gotten this big decline in here, and this is a weekly chart. If I should have gotten maybe more of a daily, so you can see how this performance, how it starts to gain relative strength against the overall market, and this is a very good indicator to look at to make sure that that this starts to happen, and to just give you a little bit more of a confident boost in that. Again, guys, thank you for watching, and this is Elliott Wave Cafe. We're open 24/7, from cryptos to stocks to macro to gold and oil, to interest rates. We're watching everything all the time to kind of get us on the right side. We're trying to pick good stocks and have a solid portfolio moving forward. This is where you can find me again at Elliott Wave Cafe on Twitter. This is the bot that will take you to the membership and to the premium room up there. There's no card required. You can take a 7-day free trial so you can see what's there. This is pretty much our menu. There's also an Elliott Wave course available if you subscribe for 3 months. You don't have to, but that's something that we throw out there if you're not familiar with the Elliott Wave principle. So again, I'll leave it at that, guys. Thanks again for watching, and we'll see, depending on how much interest we get in this. Please leave your comments below, and if you want me to look at different stocks, I'll try to pick maybe 1 or 2 a week and see how things move forward. But thanks again for watching. This is IBM. This is Elliott Wave Cafe and the Cowboy. Thank you for watching. Hit the thumbs up, and I'll see you later. Bye-bye.